Morning everybody, it's Chris here from Student Education with the 4 Majors and Alerts update for the 4th of May 2011. It's going to be going over our CTC strategy this morning on the 4 Majors, starting with our Euro against US dollar pair. Let's have a look at the daily time frame. Very indecisive yet again for this pair. Just going to draw the uptrend. You can see the distinct uptrend for this pair. Notice the CTC is well extended. Blue. The odd pullback, that's going to happen to previous support and resistance levels. We had a resistance level back in November, which we tested in early March or mid-March, breakouts towards the early part of April, and then a pullback during the mid part of April to that prior resistance level and a bounce to the upside. And since then, we've actually seen this pair for the last number of days being quite hesitant. Around the 149 area, the 1485, 100 mark, very indecisive. 2, we had an exhaustion candle, price acting, then we had almost a shooting star formation, followed by indecision, dojis. We want a decision candle, guys. If you're trading long term, we have to have a decision candle in our favor. So if you're willing to buy at a time and wait for that classified or for that definite direction candle is what we require this time, because we've got almost 5 solid days now of indecision. And you can choose to trade indecision, not a problem, because people yesterday did make money on the intraday side of this particular pair, but we want to trade momentum. A clear breakout, you're getting momentum drives in your favor, and that's exactly what we want. You can see clear indication here, breakout, that drive. And here's another one, resistance, breakout. That's exactly what we're looking for. We're looking for these breakout areas so we can trade the drive, the momentum that the commercial traders or non-commercial traders are putting money into in that direction. So indecisive. Now this indecision comes around primarily because on a weekly chart you can see we're going to be testing the 1500 mark. Now the 1500 mark is quite a significant area, primarily because we've had a lot of resistance here in the past, a number of weeks, almost 2 months of solid resistance at this area, and the closer we get to that, there's more likelihood of indecision or to start creeping in, because psychologically the large speculators out there will be thinking, hold on a moment, if I've been in this trend for X amount of months, maybe now is a good time to start pulling a lot of that profit off the table, and we're going to start seeing the 1500 becoming a potential resistance level, ceiling level, and we're going to get indecision creeping in, or a change of the guard, i.e. bulls to start with. You can see since early part of this year, the bulls have been well in favor. They're all marching on quite regimentally every single day, every week, posting higher highs as it goes, and a lot of us being left here scratching our heads. But the closer we get to this very strong resistance level that we're seeing on a weekly chart that we saw back in October, November of the previous year, sorry, the year before that, 2009, then there's likelihood that we're going to see exactly that occur. The closer we get to this 1500 mark, the more likelihood is we're going to see a bit of indecision, a change in the guard, where you're seeing more bears, a lot of people taking profits off the table, so we start seeing these pullbacks occur, and we start seeing this happen, but on a bigger time scale. We saw in October of this year, last year, sorry, apologies. And then the shooting star 2 as we hit this area, and then we could see a pullback. This is all speculating because it's all probability, but I'm looking at it, and we've had a very strong resistance level here in the past, so undoubtedly we're going to probably have something happen when we get closer to that. Just going to move back to the daily time frame. So in decision, we want a decision candle, and we want to trade that decision candle. I mentioned yesterday on my chart, on my video blog, that we have a box. Not a lot of you, but one or two of our students were interested in that. They did do a trade on the particular one, and some of them did well, and others didn't. Primarily what we want to see in a box is obviously a breakout, and a breakout close of that box. Okay, the stronger the smaller the intraday time frame you look at, well, it depends. I mean, in this case, you can see the box is quite significant. It's quite pronounced on the 4-hour chart. So, in theory, what we want to do is see a pronounceable, a definite break of the box. Ideally, you don't want to be trading in this zone because you'll just be. You can make money, however, in this. I'm not saying you can't. You can, but in a lot of the cases, you don't want to be trading indecision because you don't know how the actual extension is going to be. Over here, for example, you can see it quite clearly, but very choppy nonetheless. But you could trade effectively in this channel. Ideally, those of you who don't, we want to see a definite break on either side of this. And this is the thing, though. So these boxes can appear on any time frame: daily, weekly, monthly, 4-hour in this particular case. Right down to any time frame, you'll tend to find these squeeze patterns occurring. And these squeeze patterns tend to occur, especially if they're looking at bigger time frames, when you're approaching a significant support and resistance level. In this case, we're heading towards 1500. You're starting to see a bit of a hesitation. I mean, if you look at the small time frames, we look at this, you'll notice that the early part of this extension is quite nice and neat, and then we had this almighty crash, and then we saw a revert, but this is very stagnated. You can see these almost little breakout areas, and now we're sitting at a plateau again, and we're sitting in this box. Now, effectively, what we want to see a break of this, okay, and a break and a healthy close on either side. That's what I'm saying. We don't want to be trading that, like a lot of you got caught up in. We don't want to be trading that. So, when I say a healthy break, definite bearish engulfing in this case. Engulfing all of this, a definite bearish one. If you don't see, this is the thing though. Trading bigger time frames, you're going to be giving a lot of it back to the markets to start with. And this is the problem though, because your money management rules, etc., like that, won't allow a lot of you guys who are starting off in the beginning to trade, because your stops are going to be that much far greater, and you find that your money management rules won't allow you to actually place those trades because your entry is quite far away from where your stop would initially be. And this is the thing that you got to understand. Trading bigger time frames, you're going to find you're not whipsawed into a lot of trades, but the downside is you're going to find that your stop management, etc., like that, is going to be paramount, and some of you won't be allowed to, or won't. You won't be allowed to actually place those trades because your money management won't allow you to do that. So this is the thing. Look for the breakouts and look for the noticeable breakouts. We want a clear indication, a breakout and close. I.e., on this one up here particularly, because the 4-hour is showing a genuine box pattern, you can see highs and lows very clearly. Unlike if you saw it on a smaller time frame, i.e. a 15-minute, because you're going to be looking at these wicks here, are going to be disjointed all over the place. If you're looking at that time frame, then your box would obviously, well, ideally you want to be your box would be a lot bigger for one. So you want to be trading, so the breakout area would be ideally that. The high of that candle and the low of that candle. And this is the thing that you got to be aware of. You don't want to be caught in these wicks, because that'll happen. But you notice a lot of the bodies are closing around this level. And this is the thing, if you look at bigger time frames or smaller time frames, be aware that you're going to get fluctuations where price is going to pull back, and this is where people get caught and sucked into trades unnecessarily. Be aware of it. So if you don't want to be sucked into trades or triggered too early and stuff like that, then rather bide your time, rather give another 10 or 15 pips to the market, because ultimately what you want to do in this case over here, you get some beautiful moves once a breakout's been, once a box pattern, consolidation pattern has actually been broken, and that's what we want to trade as traders, because there's a lot of indecision occurring in that box. Speculators are speculating all day long, all week long, etc., depending on how long big the actual pattern is, and all you're doing is you're just getting a lot of whipsawing. So we don't want to trade the whipsaw, we want to be trading nice clean breakouts. And this is the great beauty of trading box patterns or flags or pennants, etc. is we're waiting for that definite bullish or bearish outbreak to occur, and we trade that, because that's where the good money is. That's where the big bucks, that's where the good money is being pumped in, and that's where we want to be trading. So in this case, we're all upside, but we've been quite bullish on the euro for some time now, but alarm bells are starting to ring now, because we've been in this consolidation pattern for quite some time now. We know that if we break to the upside, then we have the 1500 mark, which is not too far off. It's still 50 or 60 odd pips away or more. It's there. So if we do see a break to the upside, it's going to be a genuine. Well, I'm not saying it's not going to be genuine, but you're going to get a definite one to the upside. But there's a likelihood we might see that pullback occur, and you do see that. So breakout, momentum drive, then a slight pullback, and then continuation in that direction. So we could see momentum or shift of balance now happening in this consolidation area, i.e. this box. And what we should be looking for, if there is going to be no more further action to the upside, is a genuine bearish engulfing pattern to the downside. Now we look at the fundamentals to give us an indication. Is there any news this week that's going to probably swing it to the bears now, and we act on that? There's a lot of news coming out, especially in the stateside. We've got interest rates. I think sterling, I'm not too particularly sure about them. Have a quick look. Yeah. So looking at the figures tomorrow, Thursday, we have, for euro, we have the minimum mid rate. So we've got interest rates sitting at 1.25. They don't see a change in that particular instance. You never know, though. You might find the ECB might just turn around and say, hey, let's go for another 0.25 or 0.75. There's that. Most importantly, there's also the Fed's talking later, and then we have the all-important news out tomorrow. Oh, not tomorrow. We start having them out tomorrow, especially US side. We have unemployment claims, and then we go into. We've also got the we've got Bernanke speaking late tomorrow afternoon. But we have that all-important for Europe. We have the all-important minimum bid rate tomorrow, interest rates announcement. But Friday we have the all-important one. A lot of news out. Especially in the US, we have non-farm payroll changes. So it's the first Friday of a new month, and every first Friday of every month we have non-farm payroll. So that one tends to move the market quite a lot. They're expecting a smaller figure than previous. Let's see if that works out. So there's a lot of news still coming up for this that can move it. So anything US related to the US news is quite negative. You might find the euro might jump on that news and trade to the upside. There's word going around that a lot of non-commercial traders out there are actually trading euro against US dollar as a carry trade, interest rates, etc. So we have a change in interest rates that could very well affect this pair. So be aware of it and trade that correctly. So at the moment now we're in hesitation, and as far as I'm concerned, I'm not going to be trading this until we actually see a definite break either side of this pattern. I'm looking at trading longer term time frames, especially now that I'm not going to be here at my desk for the next week or so, as Nikki and I are away in Spain on business. So I'm looking for the bigger picture now, and if I can get a clear indication of a breakout, then I might choose to trade it. If not, then I'll just bide my time. Next pair up is the sterling or cable to you and I. Just looking at the daily time frame, you'll notice we're also in an extended uptrend for this pair. But yesterday we had a huge, massive bearish engulfing after a number of indecision candle days. So prior to this weekend and just after the weekend, we had 2 days of very indecisive trading. This is all coming to hand also roughly around, if I look at a weekly time frame, there we go, also around prior highs. Long-term resistance. You'll notice that this pair has been tested this area on a number of occasions in the past. We're looking back here to 2009, guys, and you can see a number of months of hesitation at this current area. So we're looking at, if I'm not mistaken, bang, 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 here we go, 16,700, strong resistance. And psychologically, this is going to play or be on the minds of a lot of speculators out there. And sure enough, even though we had upside movements, bang, straight into resistance wall, an invisible wall. There was news out yesterday, don't get me wrong, but we saw a definite break to the downside, and we're still trading lower this morning. We just had news out on sterling, the nationwide HPI month-on-month figures. These figures are selling, the selling prices of homes here in the UK, and they were expecting 0.3, which is lower than the previous figure, and it came out a negative, so not very good. So I mean, if it had just been like 1 point out or half a point or something, it would have been okay. But it came out they were expecting a forecast of 0.3, and it came out a negative 0.2. So it's almost a full point difference. Sorry, 1, 2, 3. Yeah, there's a number of point difference in there. So that's definitely going to be not great news to have first thing in the morning, but we can trade that downside, which is great. So, and that's what you're seeing now. We're seeing the Asian markets are open quite flat, and then European session open has seen price start heading south. What else do we have for this pair? We have construction PMI results at 9:30 GMT this morning. And that's it. Sorry, we've got prelim mortgage approvals. They're expecting a slightly higher forecast than the previous one, which is interesting because not selling homes, high mortgages. Okay, so yeah, that could be interesting. But there we go. We're starting to see there's been momentum probably starting to creep into this, and we start looking at areas where we could see hesitation taking place. Well, I mean, we tested one here at the price swing here on a daily. This is the one we're trading just below right now. So ideally, if we want to see this as just a correction, this bearish, then we obviously want to see price staying in this area here, because if it's staying here, then obviously the momentum, this negative momentum, is quite stagnant and not coming, and all it's going to do is just fall down for the moment, and then now it's hits it, and then we're going to probably see a bounce to the upside. If it fails to find support in this area here and closes lower, then obviously we have to look at other areas of the downside. There's another consolidation area roughly around the 1635-100 mark. We've seen price thereabouts. You can see resistance, resistance, resistance. So that's another area price could go to on this trade to the downside. So you can see the trend is there. The major trend is still to the upside, and we could be heading towards that first trend line roughly around the 1635-100 mark. Break through that, well then we've had a lot of indecision in between that, but ultimately 1600 would be the next target, because that's the genuine support and resistance line in this particular setup. So it'll be interesting to see what happens with this. So at the moment now, intraday, we're looking at a bit of hesitation creeping in, and sure enough, if you look at an hourly chart, you can see price has been forming lower swings. And if you're forming lower swings, and obviously you're in a negative trend, the CTC is in our favor, trading below all the moving averages. So this is pretty much heading, looking like a definite change to the downside. You can see the momentum is still negative. This next move we're seeing now, if this continues to the downside, then obviously posting us lower swing than the previous one, which is previous to that, you understand what I'm saying. So you can see we're definitely marching on to the downside. We are roughly trading around a price support and resistance line as we speak, so be aware of that. We've had support, and now we're trading around there. You can see the momentum, even though we had a massive starts to go sideways, because we're coming up to this momentum line we're seeing on an hourly chart. Makes sense, guys? Okay, so the hesitation's on the creeper now, but if we see a break of that 1645-100 mark in a 4 hour, then it could be a genuine indication that there's more to come to the downside, and we should be looking for further setup. So wait for a definite close below 1645-100 for further downside movement. Otherwise, we could see this as just a potential move to the downside, then the consolidation taking place, and then, like I mentioned, we could see seeing that bounce on the daily, and then we could be reattempting the highs that we saw just recently. But a failure of that level there would definitely show us confirmation that there's further downside movement to be expected, and we should be looking for nothing more than downside movement. Next up is the US dollar against Swiss franc. Let's have a look at the daily time frame. Here, in the case of the two pairs spoke just recently or previously, this one's doing exactly the opposite, and you can see that the pair is definitely in an extended downtrend. CTC is well extended to the downside, and we should be looking for nothing more than trades to the downside. How far this is going to go? Well, I mean, we can look at a weekly. You'll notice that we're trading very much so to the downside, and you can see that we had two prior swings lower. You could use these as a head stop, a potential indication of where price is likely to go to, and we are literally testing that as we speak. So is that an indication that there's meant to be a bit of a pause now? If you look at the bodies, or if you trade the wicks, this is where the speculation comes in. So if you do the wicks and look at that, then well, you could be looking well in excess of way down here at 83, even 8200. So, or if we go for the bodies, then we could see where we are right now as a potential heads up. Notice we had a bearish pull down, almost like a breakout occurring, and now we're sitting, and the range is quite small for this pair. So factor that in. If you wanted to, you could also look at this particular one here where we saw the initial breakout. So here, for example, down to this area here, and then we saw a pullback occurring, and 100% is roughly here at the 85.50 mark. So we're trading thereabouts. So on a weekly, look at this area here at 85.50 as a genuine area where we could see hesitation creeping in, because that now as extension is 100% of the previous extension to the downside. Okay, so as we're heading towards this 85.50, then obviously we're seeing hesitation. The nice thing about this particular pair is we're getting momentum drive in our favor, and it's pretty much just falling. It hasn't been this long, big, whippy moves to the downside. It's just been gradually falling, you know, and some sort of time warpy thing. And you look at an hourly chart, a 4-hour chart. This is a beautiful trend to trade. So if you're in this long term, you know, this is exactly what you want from a trade setup. You know, just moves, lower swing, lower swing, lower swing, lower swing. Bit of a hesitation around a predominant support and resistance level long term, and we saw that around the 900 mark. And then we saw a break of the 900, and then we saw back to this nice down move, down move, down move, down move, down move. And if you're trading long term, then you could pretty much use a 20-period moving average as a ceiling level for this. I mean, you could see how she's been using the 20-period moving average quite successfully. And the CTC is a genuine, this is exactly what you want to see from the CTC. All the moving averages well evenly spaced out, and we know that the US dollar has been falling quite drastically in months with this pair, and we're trading at an all-time low in regards to this pair. So if you're looking for potential setups, rather look at the bigger time frames here. For example, you can see that price has now pulled back, and by doing so is now testing the underside of this particular area, the previous support. Now, in any case, if we'd broken through a previous support, then obviously this is just a pullback, and then hopefully, as price has dictated in the past, breakout becomes resistance, becomes continuation. Case in point, in point here, for example, support, breakout, pullback, continuation. Here again we have support, breakout, pullback. Are we going to see yet again another continuation? And this is what we're looking for now. Don't get suckered into going long when there's a lot of momentum that needs to be, this pair needs to come up with in order to be trading favorably. We are trading at an all-time low. It's got to do a lot of work. There's got to be a lot of momentum in favor of the US dollar to be looking for positives to the upside. So, and having said that, let's look to see if there's likely to be a resistance level now around this area at 86.4, and if we get that, then look for an opportunity to trade this to the downside. And look at the fundamentals of that. Do we have any news announcements this week? Hell yeah! You know, we have minimum bid rates, interest rates, we have non-farm payroll, all US related. These all will be factored into that. and these news events could very well change the course or the direction of this particular pair, or give us a definite indication of where we're likely to see this particular pair continue for the remainder of the month in particular. So factor that into your trading, guys. Last pair of the day, the US dollar against Japanese yen. Here again, like it's like the US dollar against Swiss franc, we've seen this pair in a negative cycle. On a daily time frame, you can see that we are back below the 200 period moving average, back below all the moving averages that we saw price trading well above at one stage after the intervention globally on this particular pair. But now reality bites, and we're back below where price was not so long ago, and we're testing lows. We're trading lower than previous lows, in fact. In this case, the 8100 mark, and price has tried to it tested the underside of that particular pair. And this is the thing now, we're seeing all the moving averages crossed over, CTC's in our favor. We're trading in that range now where we below a prior support area that we saw for a long period of time, skipping along this area or thereabouts. And what's happening now is we could see price fall even further now, primarily because, I mean, at one stage before the incident in Japan, we saw price trading an all-time low, and it is trading at an all-time low. We've only seen a correction recently because of the intervention globally from the G7, and as well as the Japanese government selling their currency and buying US dollars to get this intervention, to try and pull this momentum drive to the downside out of this crux, and try and see if we can get some momentum to the upside. We all know the Japanese country in its own has gone through a very volatile and a very sad occurrence, a global phenomenon, which can't be helped. And this is where we're going to have to see. It's going to take a long period now for the Japanese economy to get back on its feet again. But I can assure you that with a lot of help, and I think the ECB mentioned it in some news events in the last month, that they're going to be doing a lot of things to help stem or help get the Japanese market back on its feet again. So that's going to occur, you know, with certain things that they'll be able to do in relation to that. But we're now at the stage where we're trading below a very strong previous support, which doesn't bode well for this. I mean, if we look at a weekly chart, let's see if this can give us a weekly chart. You can see that if I zoom right out, I mean, my data goes back to 2005, and well, I mean, we don't need to be looking at. I mean, we know we definitely are an extended downtrend, and we are heading further. I mean, the good thing is though, this support, it definitely is nailing out a support here, or thereabouts. Bar this freakish break down to the downside that we saw early part of March. We're here again. The longer you look at it, I mean, this could be a clear indication that the US dollar could be forming a bottom going forward. So the longer it can stay above in this case, the 8100, then there's a good likelihood that we could see a strong bottom being hammered out now. Because it's a number of months now, you can see this actual support being made aware, you know, made strong. You can see that since October of last year, we've seen a definite support here around here. Bar this down candle here, we're back above it, and we've got to treat it as well. Hold on a moment. If this is on a big time frame, on a longer time frame, a possible solid formation or grounding level being formed. So if we don't see anything falling lower than 80, then we definitely are seeing what could be the likelihood of a possible support being forged. So you can see a lot of momentum to the downside, but as we've seen this momentum drive, you'll notice that the momentum is pretty much going sideways. Unlike here, for example, that drive would have obviously lower. If you've seen this correction, this next drive here should have ideally occurred before the end of 2010. If you think about it, look at this momentum, it's there, it's very unique, bang bang, and then okay, well, just cleared the support, sat around there for months on end, and then we saw another breakout of that support. So the drives aren't as strong as they happened way back in 2007. Why? Because obviously we didn't have. That's where the whole. That's where this whole thing started initially, with the downturn in the market in 2007, and we're seeing correction now. So could this be a heads up? Hey, we could see the US dollar strengthening now in months to come. It's a possibility. There's a lot of momentum now. It seems to be losing a lot of steam. But if we're going to see a genuine break to the down, for further down movement, then obviously we want to see a close lower than all this. And by trading below at least where it is now, and ideally below the 80.50 mark, then definitely a clear indication that we could be seeing further downside movement. But there seems to be, in my eyes, long term, there seems to be a potential correction that might be occurring here. And I think we need to factor that in, because if the US dollar is strengthening now as things go on, there's talk that sterling and euro in particular, especially the euro, is far too extended. And if this is the case, then we could be in for a bit of a change. That's what I'm saying. So heads up. So negativity across the board, and then obviously we should be looking for further downside movement intraday. But as I mentioned to you, that momentum is kind of dwindled now, and you're seeing price making its way down to the downside. Don't get me wrong, but it's taking its time about it. It's not showing a lot of definite momentum to the downside. That's what I'm trying to say. It's not very clear emphasis to the downside. It's just kind of going. It's just going about its thing, going down, to be honest with you. But that momentum, it looks like it's kind of peaching out. And if I just draw a simple line under the bottoms here on an hourly chart, you can see that drive is still down. The momentum, we've had a couple pullbacks along that line, but you can see the momentum still shifting to the downside. Our CTC is still in our favor, and more importantly, we're still trading below all the moving averages, bar the very short term one, the 20 period. But you can see a definite support forming around the 80, that area. So we are now testing an area where we could see a potential bounce to the upside. That coming tied with non-farm payroll, minimum bid rates, etc., that we can see tomorrow and Friday, all could stem to, we could see possible US dollar strengthen. So if the news comes out tomorrow and Friday, especially non-farm and all that, really negative, then we could see continuation to the downside. Or if we see favorable figures, then we could definitely see the start of a potential upside movement again. Okay, so factor that into your trading, guys. Very, very important. You go to the 30 minutes, etc. We're still trading below all the moving averages, primarily the all-important 200 period moving average, so be aware of that. And don't get caught with your pants down trying to trade against momentum. We are in a negative trend. Look for potential breakout again and trade that. You can see how on a 50-minute chart how iffy this particular pair is. We had some definite moves to the downside, but now we're in a consolidation band. This trend's been broken. We're now going sideways, so heads up. We could see this happening for the remainder of today, going into tomorrow, all in anticipation for the minimum bid rates and the non-farm payroll figures to come out. So don't want your trading time. If it's going nowhere, rather put a box around it, put your alert signals in, and don't trade the US dollar Japanese yen. It's the same with all the other pairs, guys. We want clear indication of movement, and we want to trade that clear indication of movement. Otherwise, we're just trading speculator stuff, and all you end up doing is just spending a lot of time and effort going nowhere, in fact. And we don't want you to do that as traders. So factor that in. Anyway, I'm going to stop. 33 minutes later for this, and still going. You're probably tired of hearing me. Enjoy the rest of your day. Have a fantastic day. Keep your trading simple, as I mentioned. Just follow the rules, guys. Just look at the charts. The charts will dictate, will show you a clear indication of what's likely to occur. Look at candle setups, and then apply the template that we have created here, the CTC. It's very lagging, so for all you long-term traders, it's a beautiful piece of, it's a beautiful template to trade, and just look for that. We have a lot of news coming out that will be factored in, genuinely. The first Friday of every month is non-farm payroll, and we do see price moving on that. We also have minimum bid rates expected, and those are going to also move the market in each way, guaranteed. So interest rates, big one to be fearful of. We could be, there could be a surprise, one or two surprises, who knows? But that's that's what everybody looks for in the market, and once that indications come out and the non-commercial traders out there have deciphered what it's likely to do for the market, then the big money comes to play, and that's what we want to be trading. We want to be trading with the big boys in whatever direction they choose, because we can make money both ways. That's the beauty of trading. So all that's left for me to say is enjoy the rest of your week and trade serenely.